right, we are live. Sensei Chat number 77 coming to you from here in Honolulu, Hawaii. Got a lot of stuff to go over with you guys today. Man, there's no short of news. We saw this Bitcoin pump on some false reports of an ETF being approved, and man, it went up and it went down, and we're going to talk about it. Also have news from all across the crypto space. California is pushing to approve crypto. Got some information on that. Your XRP, your XDC, all kinds of other crypto updates are going to be here today. We're also going to talk a little bit about some wins that we've had recently in the Cryptonaires community. Let me go ahead and just make sure the sound is good. Also have news. Yes, it is good. All right. I wanted to welcome everybody in for this chat. Please, if you have any questions or comments, go ahead and let me know. And as I pause the video and get through this chat, I will answer those questions as we go along here. Let me just get this chat situated in front of me. All right, let's go ahead and start. Here is Mr. Fink talking about Bitcoin. Let's talk about this.
This rally is way beyond the rumor. I think the rally today is about a flight to quality with all the, all the issues around the Israeli war now, global terrorism. And I think there's more people running into a fight to quality, whether that is in treasuries, gold, or crypto, depending on how you think about it. And I believe crypto will play that type of role as a flight to quality. This rally is way...
Crypto will play the role of a flight to quality. In 2017, 2018, and pretty much up to 2020, Larry Fink was against crypto. Obviously, it was still in his infancy, and it still kind of is in its infancy. And so you are seeing a push by people that invest their money with BlackRock that want to get access to these assets. And that is why Larry Fink is out here talking about them. You also had this clip from John Deaton, Sam Lyman, and Scott Melker talking about these big players that want to get in the crypto space. Let me play this and we'll talk about it.
Sam, you made the best point. Like, talking about BlackRock, Fidelity, these are huge players that are looking to get an approval of a Bitcoin spot ETF. Larry Fink was on TV yesterday and said that crypto, didn't say Bitcoin, he actually said crypto is a flight to quality alongside US treasuries and gold, and that's what it's going to be viewed as. People seem to have missed in the fact that they applied for a Bitcoin spot ETF that in their last yearly investment letter, Larry Fink and BlackRock went on a very long tirade about the future of finance being tokenization and tokenizing assets and everything trading digitally. We just saw BlackRock settle the first transaction on JP Morgan Onyx, which was a tokenized mutual fund sent to Barclays Bank. This is happening with or without the SEC, and these players are more powerful than the SEC. Some people say, there's a joke that it's the judicial, executive, and legislative branch of the United States, and that the fourth one is BlackRock. I would just say that BlackRock's all four of them. Right? one way or another. And so when you have Larry Fink, who, in my opinion, is a much more powerful and reputable person than Gary Gensler, on TV calling Bitcoin and crypto a flight to quality, you know that this is inevitably coming. But as to your question,
it's inevitably coming, guys. Also, check this out. Crypto enacts comprehensive crypto regulation bill. Now, the reason this is important, and depending where you live in the United States, you might hate people from California. You might love people from California. California has over 40 million people that live in it. Most of the tax revenue that is generated to pay for government things, roads, buildings, that type of stuff, comes from the state of California. A lot of tax revenue comes from California. So love it or hate it, California is a very important state in the United States. It says, this is from Kitco News, the state of California has become the latest to enact a comprehensive crypto framework for regulating the cryptocurrency industry after Gavin Newsom signed Assembly Bill 39, which establishes the Digital Finance Assets Law. Newsom signed the bill into law on Friday, more than a year after it was unanimously approved by the state's assembly. Despite facing heavy criticism of the cryptocurrency industry, the Digital Financial Assets Law was originally introduced in February 2022, and as Assembly member Tim Grayson. The bill will provide consumers basic but necessary protections, and it will promote a healthy cryptocurrency market by making it safer for everyone, Gavin Newsom said. So, you love to see it, right? You're going to see more Democratic states and Republican-led states pushing for their local laws for cryptocurrency. This is a great step in the right direction. You can see, what is this? Cointelegraph did cover this as well. And here is the signed order from the 13th. So you'd love to see it as we get into a place where more and more people are going to be interested in crypto. Obviously, the people that have been here, who have been researching, will, of course, get in before all of those other people. And so that's what this whole situation is right now, guys. We're in this bear market. We should be learning. We should be growing. Every day, you should try to put a little bit of time into learning something new in the crypto space. There's always new things to learn. We do talk a lot about different crypto use cases in Cryptonaires. I just wanted to point out from the Discord 2 things here. One was a project that Rayon posted. This was actually, this is the beginning of the month here. He did post about this perps. This is our first challenge. I wanted to share this with you because right now it's about $3.6 million market cap. I bought in about 2.6 million, so I'm up about 35 to 38% in the last couple weeks. And this actually dipped after I bought into it down to like 2 million. So for the members that got in and are looking at over 35-40% gains, congratulations. I just wanted to just big shout out to Rayon. I know he works really hard trying to provide this information to our members. Congratulations to you. Also, I wanted to point out one more project here. We just started talking about this week, actually. I just want to show you that we did post this project in new projects here. Storage Chain, this was posted back on the 11th of this month. Storage Chain is a decentralized cloud storage and file sharing platform that uses a network of nodes to store data in a distributed manner. Distributed cloud storage disperses users' data over geographically and statistically different nodes. You actually split the data up into 42 different places and shards. I really do like this project. I've been talking about it. I've been actually running a couple nodes for this project, and this project did see a huge spike. We posted about it on the 11th. I bought into this project on Friday the 13th. So I wanted to give the community time before I actually bought into it. It did pump up over 100% because it is still a very low market cap, sitting around 200 and something thousand. But another gain if you just traded in and out of the token. I told my community what I was going to be doing with the token. I'm going to be making nodes for passive income, and just another great project that was brought to Cryptonaires members and the opportunity. So let's keep it going with this news and information. Grayscale reaffirms readiness of potential GBTC to ETF conversion. It does look like the SEC is not going to appeal this case, and I don't think they're going to allow Grayscale to make this move before they approve like BlackRock, Vanguard, Invesco, and all these other guys. I think this kind of did not stain the SEC, but yeah, technically it did stain them. But I think they're going to hold off Grayscale as long as they can. They're going to allow these other players to get these ETFs, these spot ETFs approved first. I was watching Bloomberg this morning. He had an analyst on this morning that said that they basically are looking at 90% that they think that in the next 90 days that you're going to see these spot Bitcoin ETFs approved. There's just too much pressure from around the crypto space, as well as people from Congress and other places. And I mean, when you have power like BlackRock and Vanguard and all these big players do, they end up getting what they want eventually. There's just kind of no way around that. ISO posted this crypto stablecoin regulations in 2023. I'm going to get it. What's up, Ron? Nice to see you, man. I'll get to some questions and some comments in the chat here in just a little bit. Don't forget to go ahead and like the chat if you guys can. That does help us get in front of more people. It says by the end of 2023, we could start to see the initial stages of decline for some of the legacy processes that aren't moving on to DLTs. The relative cost of DLT adoption will start to come in, while the cost of maintaining legacy systems and procedures will go up. So basically what this is saying, if you're an institution or you're a bank, if you don't adopt these newer technologies, these older technologies that you're continuing to use, the cost is going to go up. And at the end of the day, when you bring in some DLT, you're able to do instant settlement with crypto assets. You're going to save on those, enormose bank fees, right? How this works, guys, is when you have JP Morgan, you have Citibank, you have like these Wells Fargos, these guys all have their own infrastructures, and banks pay them to move payments and money around because they have their systems already kind of built up and built out. So these banks are having to pay 2, 5, 8% to even move this money through these bigger conglomerates. And so this is really going to help the smaller regional credit unions. These are the type of banks where they're going to see the biggest impact from using digital assets. And I do think you are going to see a wave of adoption here in 2024. This is talking about robust regulation. So expect to see these authorities in the U.S. Taking a robust approach. Offshore centers like the Bahamas will feel increasingly pressure to follow suit. Of course, in the EU, the implications of new crypto regulation, MiCA, markets and crypto assets, will be felt as this becomes reality. In many ways, we expect 2023 to be a year crypto gets regulation. We'll see. In the U.S., I don't think 2023 is going to be the year, to be honest with you. We can't even elect a speaker right now. It's kind of rough. So there's a lot of other things that are going to take priority over crypto regulation. I do think as you see the EU and the UK using certain digital assets like XDC, maybe possibly XRP, I do think that puts more pressure on the United States. I mean, you got great regulation up in Canada. I do think the US is kind of falling short here. Obviously, there's so much infighting, they can't even, get anything past at this point. So let's hope that does change and we can take crypto to the next place in 2024. Another clip here from ISO, this is from worldline.com, says it seems very likely that by the end of 2023, this regulation will be adopted and will make it mandatory for all banks to send and receive instant payments, another essential component of this new regulation in the beneficiary IBAN name check. So what's funny? I was watching the new Mission Impossible movie last night. It's on iTunes, and they go to transfer $100 million at the end of the movie, and it's in crypto. And I just thought that was fun. I thought that was kind of cool. I think you're seeing more and more of these media companies putting crypto in. And I mean, let's be honest, if you're going to be sending some kind of money that you're not going to want to, have on regular books, cryptocurrency is a good way to go. All right, so from ISO, we posted this, all of our 3/4 DLT integrations. I think this is a great little visual here. You're seeing DLT connections on the left-hand side, and then who uses quarter on the right here. A lot of big banks and companies. It's going to be seen if R3 does end up using XRP. It does feel like they're going to be more inclined to use XDC and some stable coins with their institutions. We'll have to see. I know there was that big fight a couple years ago. Crypto Eerie did a great video on the backstory of R3. I think that's worth a watch. I learned a lot from that video. So if you haven't seen that, please go to her channel and take a look at that. Internet of Value through 19th of October. There's an event coming up. Join us at the live Medico Talks through the 19th of October, 2023. I'll bring some clips and some updates when we have it from this event. All right, R3, we are honored to receive the Best Permission Technology Initiative Digital Asset Awards from Banker Digital. So R3 continues to win awards, and I think that is going to be an incredible platform. By law, instant payments will become the new normal. This is PPI. We talked about this in maybe three or four Sensei chats ago. It says, by law, instant payments will become the new normal. Payment service providers will have to offer corresponding functionalities to all customers in the future, but it will not be allowed to charge higher fees than normal SEPA transfers. The demand for banks, IT systems, and high 24/7 availability, IBAN name matching in real time, processing 3 times the amount of previous transaction numbers. Now, this is a cool thing, right? Processing 3 times the amount of previous transaction numbers. Now, imagine, a lot of people work a 9-to-5 job. They get paid twice a month. The reason you get paid once or twice a month is because it's very expensive for companies to do payroll. Imagine if companies could pay you every day. For every hour that you worked, at the end of the day, you got to check how much would that help the greater good for people. I'm not necessarily saying it's going to happen like that, but that's a real possibility. And I think that is where you kind of, level playing field, and you really start to help people out, because a lot of people sometimes have to go to these ridiculous borrow places where they pay these enormous amount of fees because they have to pay, a medical bill that came up or something that happened in their life. Most Americans can't afford $1,000 payment if it came out of nowhere. So, this is what kind of gets my mind going when I see stuff like this. I'm hoping that, financial inclusion, it'll be better for everybody around. You are seeing updates by certain banks. This is AIB Bank. I looked it up here. They're getting ready for crypto. You're seeing a lot of just different banks make some of these changes. AIB will work to validate the changes from November 20th. That's when they're updating their systems as well. So it'll be interesting to see what happens on the 20th of November, guys. Like I said, I'm telling people, don't get married to the date. I've seen so many influencers saying that, we're mooning on that date. I just don't feel like you're going to have this rush and crazy price action for your ISO tokens on the 20th. I think it's going to be a slow rollout, but I would love to be wrong. I will come back and bite my words and eat my words if I am wrong. Just don't get married to the time. Don't get married to the date. It says in the first 21st century, it's time for Europe to embrace blockchain DLT. Europe and ISO November upgrade. Like last year, the results of the research project remain disastrous in 2022. One reason was that the implementation of ISO, the only SRD2 compliant message format, has been further postponed to November 2023. So this is more talking about, hey, we're updating to ISO, and I'm going to have more updates about this further on here, and I'll include this in my notes if you want to come read this whole executive summary, but at the end of the day, this is kind of what it's getting at. Here we go. Universal basic income. Universal credit thousands move to new benefit from Monday. I said that this was the way that you're going to get a lot of these people to use crypto in different ways. Universal basic income. It does feel like we're heading to a place where, money printing is not going to be an option, over the next couple decades. They're going to have to reset the financial system. When they do, a lot of people are going to lose a lot of money and value, and they're going to, universal basic income will be here to say. The government will go ahead and send you, money every month. I don't know how this is all going to work out, guys, but this is how you get people to adopt CBDCs, is universal basic income. People love free money. They'll tell you they hate CBDCs, they hate CBDCs, but then they're like, hey, we'll give you $2,000 a month, but it's through a CBDC. They will adopt that technology, and just mark my words. Coinbase pushes SEC to respond to crypto exchanges petition for rulemaking within 30 days. I'll bring you updates when we have them on this. Revolut, PayPal, and crypto companies ask for more time to attune to MiCA. So this article came out. Electronic Money Association members such as Revolt, PayPal, and other cryptocurrencies are asking for as much time as possible before implementing the crypto asset markets regulation. According to reports, it appears that fintech companies using cryptocurrencies are urging European institutions to allow as much time as possible to comply with the new rules of the crypto assets market regulation bill. Specifically, it's members of the Electronic Money Association, including the banks I just mentioned, have directly asked the Department of Finance for the longest possible transition period. So it does look like some companies are ready to move, and some companies need more time. We're going to have to see how this all plays out. It says, well, MiCA was last signed into law 31st of May 2023. It will go into effect in end of December in 2024. So 2025 is going to be an incredible year for crypto adoption. I do think you're going to see a lot more things being posted in 2024 about CBDC partnerships through your Stellars and your Ripples and your R3s, and we'll see how that plays out. All right, new reports show high inflation and possible recession are changing what benefits American workers value most. I do keep a keen eye on to the economy because it's very important. The economy plays a key role, especially the U.S. economy, since I live in the U.S. But let me go ahead and play this, and we'll talk about it.
Welcome back, everybody. American workers' priorities are changing given the financial stressors in their lives. A new report from the Employee Benefit Research Institute shows how much high inflation and a possible recession are impacting the workplace benefits that employees value the most. Sharon Epperson joins us right now with more on that report and how employers are responding. Hi, Sharon.
Hey, Becky. You know, workers are telling their employers that having savings for an emergency and paying monthly bills are now as stressful, if not more so, than saving enough for retirement. That's where many employers have focused their financial benefits. The EBRI Workplace Wellness Survey asked workers where they would put an extra $600 provided by an employer. Well, they'd spread it out if given that option. First, funding retirement as well as emergency savings. Now, only about 10% of employers offered emergency savings accounts in 2022, but more are now understanding the benefit to the worker and the workplace.
When you do need that money for an emergency, you're not taking a withdrawal from your 401k plan, you're not missing a student loan payment, you're not getting evicted, you're not having your water shut off, so that you can actually come to work without having to worry about all of that.
A new federal law, Secure 2.0, will give employers more flexibility to offer emergency savings accounts and other financial benefits in 2024, including matching student loan repayments with 401k contributions. Principal Financial CEO.
All right, we don't need to get into that part of it. All right. There's a couple other videos I want to show you. We don't really need to talk about oil in the Middle East, but this plays a key role because people have to pay to get to work gas-wise and things like that. So I am tracking kind of what's going on with crude oil. I don't need to play that 3-minute video for you, but I do want to play this for you because I thought this was a really interesting way to look at not just, this is looking at U.S. debt, but I mean, European countries will apply to this as well. But watch this. This is pretty incredible.
David Weston joining us right now for our Wall Street Week Daily segment. And I think you had a chance to catch up with somebody who had that to say.
Yeah, exactly right.
Yeah.
Greg Fleming is the president and CEO of Rockefeller Capital Management. They manage about $112 billion for high net worth and ultra high net worth people. So we asked him, what are his investors? What are his clients really concerned about right now, particularly given what's going on in the Middle East? And we started on geopolitics, then moved on from there.
Investors, David, have a hard time measuring geopolitical risk. And history would suggest that a lot of the immediate downturn that occurs on the back of different geopolitical events tends to reverse over the following months. So the big issue in a place like the Middle East today for investors is, does it expand? Will it move into a regional conflict, bringing in nation states like Iran, and then ultimately impacting things like the price of oil that would have an impact on the global economy? You know, if you look at local markets in the Middle East today, they've had a fairly moderate reaction, down a little bit. The Israeli stock market in Tel Aviv was off the first day, but has been in a range since, so that even the local players so far are measured in response. But our investors here in the U.S., no fundamental change at this point in time, other than sitting here and witnessing these unimaginable horrors that the rest of us are watching. From an investment standpoint, they're similar to where they were before this.
When you talk about fundamental change, we've seen a fundamental change in the rate structure. We were essentially with free money for an awful long time, essentially zero rates.
All right, he's going to get into basically how, I've since I've been alive, it's kind of been, I was born in the 80s, kind of 84. And kind of since the late 80s, you've basically had these lower rates, right? Rates in the 80s were as high as like 20%, but then they got real cheap. And it was basically free money for the past couple decades. And this guy's going to kind of get into how we've gotten used to that and how we might need to adjust our way of thinking.
Those days are gone. It looks like we're going to have higher rates for some time to come. How do your investors take that into account?
Well, that's a big impact on investors. And that's something that they're all digesting. So, at the outset, when you look at stocks and stock markets, the risk premium that stocks bring today now over other attractive alternatives, even cash, but munis, treasuries, things like private credit, which is a big growth area for us within our alternative business, that risk premium is down on equities. The reality is with higher rates, growth companies, you're discounting back cash flows that are out there in the future that are going to grow between here and there, you're discounting them back at higher rates. So from an equity market standpoint, the higher rates are a serious headwind, particularly when you have the kind of alternative uses of investor dollars that we're seeing. And as I said, even cash. You know, if you can get 5% on a risk-free basis in something that liquid, that presents a positive alternative for investors. The other thing I would say about higher rates is the impact from a fiscal standpoint, which I know you spent a lot of time looking at. On the current trajectory, interest payments on the federal budget will exceed military expenditures by 2027. So higher for longer has a big impact on the fiscal side of the equation, which is relevant to all investors because the U.S. debt situation is definitely a concern.
And what overhang might that have for growth? Because your investors must be thinking about what are our growth patterns? What are we looking at over the next 5, 10, 20 years?
Well, you know, the U.S. economy is held in remarkably well. There's a number of reasons for that, including the fiscal spending. I mean, we're running a federal budget deficit now of 8% of GDP, and there is no recession. Typically, deficits go up when you have a recession. If we have a recession, you could see a double-digit deficit as a percentage of the federal budget. So with that kind of fiscal spending already embedded in the economy, will there be enough growth for investors in the U.S. market? It's a real concern that the fiscal side of the equation could be a headwind for investors going forward. So you have that investors are focused on. And then you have the Fed, who's obviously been raising rates to try to deal with inflation. Those higher rates are also working their way into the fiscal situation. So you have a headwind on the monetary policy side. You're likely to have an increasing headwind on the fiscal policy side. So investors look more cautiously at the medium-term outlook for the U.S.
Your high net and ultra high net worth investors must be thinking about taxation. And when you talk about the fiscal challenges we have in front of us, one possibility is higher taxes to raise more revenue. How do you invest around that potential?
You know, one of the things that we do with our investors is we work with them on a comprehensive basis across all of their needs. So we're helping them with generational work, we're helping them with estate planning, and already, even if taxes don't go up at some point in the future here, already you have tax cuts in 2017 that are scheduled to expire at the end of 2025. So we're spending a lot, and the estate deduction, the ability to leave money without paying an estate tax, that amount is coming down if those taxes are rolled back. So we're already spending a ton of time with clients on a longer term basis looking at tax policy from that vantage point. So taxes are a big part of the work that we do.
All right, let's keep it going. Is this the, what's it called? I want to play this. All right, so this is talking about, I want to play a certain part of this. This is about banks.
3 banks.
So they're going to tell you that in the last, since 2023 has happened, you're seeing double the amount of write-offs that big banks are having to take. It's up almost 100%. So as more companies are getting into this tighter financial squeeze, more bankruptcies are happening, which is less money to be spent out here in the stock or crypto market. So let me play this.
Including Citi, and their results were pretty strong.
Yeah, about as strong as you can get. They were up some 34%, and yet the warnings were across the board about the Fed, about bad loans, about the war that's going on. Wells Fargo, Citi, and JP Morgan saw combined profit rise to $22.5 billion, but despite those windfall profits, they wrote off nearly $4 billion in bad loans, and that is roughly double the amount of charge-offs that they recorded a year ago.
Double the amount of charge-offs of a year ago, and we're not even through the year yet, guys. So as more pressure gets put on these banks, more banks could fall. Obviously, JP Morgan, maybe Wells Fargo, and these guys are not going anywhere, but the smaller regional banks are taking a huge hit.
Now, JP Morgan CEO Jamie Dimon was out front sounding the alarm, saying this is, quote, the most dangerous time for the world in decades, and citing caution is needed given the wars, the soaring debt, and the Fed. Quote, while we hope for the best, we're preparing the firm for a broad range of outcomes. Now, while JP Morgan posted another quarter of record net interest income and joined Wells Fargo in lifting its full year forecast for such revenue, Citi's rate and currency traders had their best third quarter in at least 8 years.
So you're seeing more and more money get funneled into these bigger banks, and these bigger banks are making more and more profits. But I wanted to kind of point out the charge-offs. You had Christine Lagarde talking about the ECB is ready. This is more kind of supporting Israel or whatever they need to do. I don't really need to play this whole clip for you. Let me just keep it going. Also, 801 XRP has been posting a lot of these clips from the IMF meeting. This really doesn't have too much to get into crypto. I just wanted to point it out for you. There's 2 clips here. He's got a lot of great clips. I just want to give you a little bit of a taste of what this is for. And if you want to go back and watch these clips, please do so. It really doesn't have too much to get with crypto, so I kind of want to move past this. But let me just give you a little bit of a taste, then we'll move on.
This vision and mission will test the sincerity of our ambition. It's going to set us on a journey that will require reimagined partnerships, a new way of working, a new way of thinking, an innovative plan to scale and to replicate. We will need additional resources, but most importantly, we will need optimism for what could be. That is the new direction of the World Bank, and that is what I'm excited to share with you today. The first steps of this journey began in April, when the World Bank and its team found a way to squeeze $40 billion over 10 years from our balance sheet by adjusting our loan-to-equity ratio. Over the last few months, we've dug even deeper. We've created a portfolio guarantee mechanism. We've launched a hybrid capital instrument. These new tools enable us to take more risks, and they boost our lending capacity further, all while preserving our AAA rating. Taken together, this could help us provide $150 billion plus in lending capacity over a decade. And this work has been met with enthusiasm and generosity.
All right. You guys kind of get the picture. If you want to go take a look at those clips, please go visit 801's page there. I want to get into this, though, because this is about ISO, and this kind of relates into crypto. This is from Cybos. Let me go ahead and play this for you.
By improving the quality and richness of data in domestic and cross-border payments, ISO 20022 will help speed up travel towards greater integration and digitization of the entire payment space.
Joining us now is Pat Antonon, Chief Customer Experience Officer at Swift. He's here to discuss how it'll help financial institutions better understand their customers, make quicker and better decisions, and improve services to end customers. Hi, Pat. Thanks so much for taking the time to be with us.
Thanks for having me.
So 6 months from the start of migration to ISO, how are the adoption levels looking?
Yeah, it's a really great success in the start of the migration. It is a coexistence period, but we're already seeing over 620,000 messages a day in 200 countries across thousands of endpoints. So it's really a good uptake and a good start to the coexistence period.
Can you give us a little more context, perhaps? Is this what you guys expected?
Yeah, so there was a lot of time and a lot of effort from all the organizations in preparing. So many looked at it in the initial stages as a technical migration. How do I start that process to be ready for a new standard? We expected the start of the migration, the start of the coexistence, which is also happening with a lot of the market infrastructures at the same time. So we're comfortable with where we've started, but there's still a long way to go in order to be ready across the community for the end of 2025, where the coexistence period.
There's still a lot of work to do, a long way to go through the end of the coexistence periods at the end of 2025, okay? That's why I think this could take some time for really crypto to be fully adopted and used in these institutions. So that's what I'm saying. Don't get married to that November 20th, 2023 date.
Will end.
Are you seeing any differences by geography or currency?
Sure. So in the early stages, we're now seeing really what we probably expected, which is in Europe and the US as the top senders in that process. US dollars is the top clearing currency that we're seeing so far. But we have 15% of the market having already migrated, so it's a little bit too early to come to any conclusions based on that 15% that those are the corridors that are going to remain the top players.
So what has Swift been doing to sort of help the community, to support the community during this coexistence period?
Yeah, so in the readiness, a great effort, I think, by the whole community to make sure that they were ready to be able to support the start of the coexistence, because everyone needed to be able to consume ISO 20022 messages. So what we did at Swift in conjunction with the community was we put in flight in-flow translation services. So that facilitates the coexistence period because you can either use the legacy MT or you can use ISO 20022 rich data during that coexistence. So it insulates from everyone having to move at the same time and supporting that coexistence. We just published an ebook with EY and a number of quotes from many different organizations on what are the benefits, the value that you're going to get out of ISO 20022 beyond the technical migration process. We also have multiple different libraries and mapping opportunities, whether it's on the front end or the back end of your organization, to be able to facilitate that mapping to your legacy systems.
You mentioned the benefits. Can you talk a little bit more about that? How will the community benefit from the richer data that ISO brings?
Sure. I mean, the richer data becomes the foundation to what you're looking for. There's efficiency opportunities in improving straight-through processing. And then even when you have breaks and you're doing a request for information, that information's already there. So you have a lot more of that rich data, whether it's a happy flow or a conflicted flow, helps in the reconciliations as well. So on the efficiency side, definitely opportunities. On the risk management side as well, when you're screening transactions, having that richer data can help eliminate some of the false positives, but also catch the things that you didn't catch before because you didn't have that rich data as part of that process. I think there's also additional value add opportunities that customers have to really differentiate themselves and look at new product offerings or greater customer experience to their end customers in the value that the data can bring in data services or just in greater transparency in the process and the information that's being provided. And then I think finally a lot of conversations at Sibos around AI, right? I think that's one of the big components, and really the value of AI can only be gained if you have the right data and you have the rich data. So the value that you'll get out of that AI, if you have that rich data, I think brings some other great opportunities.
So what advice would you give customers who are considering starting their migration journey?
Yeah, I think many have already done the first step, which is the technical, right? The development that you need to do to be ready from a syntax perspective. But the next stage to me is the integration. How do you now integrate that and use that and get the value from a business perspective in that process? So what we really tell folks is look at where you think you're going to get the greatest value. Is it in the efficiency? Work with your internal teams or your reconciliation teams or your sanction screening teams to understand where they may see the value first. Look at your product teams to see where they're going to get value out of the richer data and offering new solutions or greater transparency to the clients, or your AI and technology teams if they need that richer data as part of their platform. Decide what's the best path for you, get started with those little pieces, and then go from there. It's a journey. It's not going to happen overnight. That's why there is the coexistence period. There's also the value in the integration with the market infrastructures that are also moving to ISO in many cases at the same time, so valuing that interoperability, which sometimes is also a tipping point in the value of when you're going to go ISO native to also support not only the cross-border, but integration with your market infrastructures.
Before we let you go, we are on the last day of Sibos this year, and you have been very engaged in the standards forum this week, where ISO has been a big item on the agenda. Can you talk a little bit about how the week has gone and some of your highlights at Sibos?
Great sessions. I mean, we had over 22 sessions, and the standards forum really brings together the community to talk about the challenges and the successes, right? What we're doing now, what we need to manage for the future. So a lot of conversation on ISO 20022, a lot of conversation on AI, APIs, how can you leverage APIs with ISO 20022, the move in securities to T1 and those impacts in standardization. So I think a great week for standards geeks, as they call themselves in a lot of cases, but always 100 to 200 people, standing room only at the standards forum. So a real success, yeah.
Well, Pat, it's been great.
All right. I thought that was really great. A lot of good information in that clip. Very useful. All right. From Wrath of Kahneman, accounting software provider Zetto is partnering with Ripple user Modular to make it simpler for businesses to automate their accounts payable function. So maybe this is kind of what I was telling you. Wouldn't it be nice if people could get paid every day? If you're using something like XRP, you definitely could do that for very cheaply. Interesting, if only because Air Wallix, another Ripple user among many rails, have previously referenced. All right, so Modular and Ripple. So Wrath of Kahneman, guys, he posts a lot of great information. If you're not following him, please do. Mr. Man posted this. We just released a chat that Mr. Man and I had on a bunch of different range of topics. If you haven't taken a look at that yet, please go ahead and take a look at that later on or this week if you can. It says, I'm just speculating, but we've seen Project Ubin utilizing Stellar XLM and Ripple XRP So let's look at Project Cedar, Wholesale CBDC, and WCBDC, Ubin, and Cedar. So there's a lot of these different testing and utilities being done. This is by the Monetary Authority of Singapore. I'm just going to read you a little bit of a juicy bit from the executive summary and we'll move on. Project Cedar Phase 2 Ubin, Project Cedar and Ubin, is a research project exploring potential improvements for multi-currency wholesale cross-border payments. The project examined whether wholesale central bank digital currencies, CBDCs, developed using distributed ledger technology could improve the efficiency and transparency of cross-border payments involving one or more vehicle currencies. This collaboration brings together Project Cedar, the Federal Reserve Bank of New York, Innovation Center, and Ubin's Monetary Authority of Singapore. So these two are working together. A lot of people say that the United States isn't ready for a CBDC. I think they are. I think they've done all the testing that they need to do. I think they could probably implement it through FedNow, which they probably will. I do think you're going to see this in announcements, more announcements in 2024. I don't think this will be rolled out until like 2025. Of course, it depends on who wins the presidency race. Depending on if Biden or Trump win, who knows? We'll have to see how that plays out. But today, a vehicle currency may be used as a third currency within a foreign exchange trade to facilitate indirect conversion between illiquid currency pairs as opposed to a direct trade. Remember, foreign exchange, FX, $7.5 trillion a day gets cleared in FX every day. If a currency like XRP or like XLM or XDC, whatever the currency is, gets a chunk of that, you could see a dramatic change in the overall price of that token. Okay. As market participants see value in transacting using major currencies due to their wide acceptance and relative price stability, these currencies often enjoy higher market liquidity. Although solutions that drive efficiencies such as low risk speed exist today, illiquid currency pairs continue to face limitations such as high costs, slow settling times, and lack of access to market solutions and limited transparency. As the prevalence of transacting in emerging market economy or EME currencies have increased in recent years, understanding the potential solution space has become an area of focus for central banks globally. Now we're talking about currencies, right? How there's 180 different currency pairs globally, right? And you have to have those currency pairs being traded against the other currencies, right? So could you imagine the XRP ledger or whatever it is that you're imagining this is going to happen with, having all of those currency pairs and all of that liquidity in those currency pairs actually being traded on said ledgers? I mean, you are talking about a large amount of money that is going to be coming into these maybe more exotic corridors or heavily used corridors. You know it's not going to be Bitcoin because of KYC, AML, sanctions checks, that type of stuff. You know it's not going to be public Ethereum because of those fees, third-party risk for banks. They don't know where those fees are going. When you look at something like the XRP ledger, right? It was built for the worlds to have a ledger that has a decentralized exchange built into it that you can trade and do all of these different transactions, right? So this is kind of the perfect technology for it. Given the range of research currently underway in central banks, it is plausible that a future state financial system may involve countries designing and developing new technologies in distinct ways. Accordingly, the Cedar and Ubin collaboration investigated potential solutions to bridge heterogeneous networks implemented under separate governance and operating models while maintaining the independence of respective central bank infrastructures. In addition to interoperability, the collaboration, which builds off the findings from the Cedar and Ubin project portfolios, aim to explore current limitations in wholesale cross-border markets such as high costs, slow settlement times, and limited transparency. The project also identified several important opportunities for future research in this space, including privacy limitations and liquidity optimization. It goes on to talk a lot more about Project Cedar, guys. I will link this down in my notes for the Cryptonaires community. If you want to go ahead and read this, please go to Mr. Man's page and go ahead and take a look at it. Finastra. Are you ready for new Europe regulations, industry forcing transition for instant payments? Finastra. So Finastra's had a lot of posts here. Actually, I want to move this here. They also put this out. Excuse me. Wait, no, this. They also put this out. Instant payments in Europe. This is the document he was referring to. This was October 4th of this year. And then this is the document, how instant payments in Europe and the UK and how to seize the opportunity by Finastra. Finastra is, in fact, a Ripple partner, unlike with a lot of other companies, obviously. But let me just read you some of the key findings here. 68% of European businesses expect growth in instant payment volumes across many rails and settlement systems in Europe. One consistent thing is anticipated continued growth for instant payment volumes. Over 90% of businesses are investing significantly in payments technology. Businesses recognize that the efficient payment strategy has many competitive advantages. Financial institutions that have met business and user demands have significant spend to capture. Almost 90% of businesses consider instant payments an important or very important as financial institutions move into this. It says FIs that are not going beyond the regulatory need to offer instant payments and are not focusing on strategic positioning will lose out on significant market opportunities. That is the sentence that you should be focused on. Will lose out on significant market opportunities. So this tells me that if your bank or your institution does not upgrade to these newer, faster payment rails, not only will you have more cost, but you might lose customers because customers are going to want those cheap, fast, quick payments, right? Efficient payments with more data that they can look at. They can track, if anyone's trying to commit financial fraud. They can really kind of dial down and send money where it needs to go without having Nostro Vostro accounts. It really is, it'll be a significant loss if people or institutions do not upgrade. Looming pricing regulations should be viewed as a catalyst for change. Financial institutions concerned about mandates to price instant payments like low-cost latency payments should be focusing on the total relationship value, attracting and retaining businesses, customers through robust payment capabilities goes beyond the instant payment transactions. It says modernizing hurdles are similar for financial institutions and their business clients. Payments as a service is growing very fast, and the cloud are key strategic components of the modernization. So you kind of need the cloud, and you need all of this to kind of go in. And this, this gets into a lot of data. You actually have to go and download the report. You have to put in your name and email to get this whole report. It is free. If you want to go ahead and take a look at this, it says instant payment usage in Europe. It kind of gives you kind of what the payments are. Thinking about a number of transactions, how do you think organizations' usage of the following payment tools is likely to change over the next 12 months? So push to card is the highest rated one. That's what they're asked. This is from a data survey that Datos Insights sent out to all of these financial institutions and organizations, and it says SCT instant faster payments 68%, SEPA credit transfers 67%, and real-time gross settlement systems CHAPS target 2 T2S is 60%. It says where European businesses are banking, right? Large banks, medium banks, small banks. So you can see a lot of this money has kind of shifted or has gone up over the last maybe 2 years since COVID. As more smaller banks failed, people kind of panicked and moved a lot of money into these bigger banks, such as like your JP Morgans, your Wells Fargos. That's why these guys are seeing such high returns now. But medium banks, small and fintechs are 5%. They are starting to gain a market share here. And this is what the big banks are worried about as more fintech firms come into the space and offer cheaper solutions to what they're doing. This is where this is going to grow over time. You also have a business investment in payment technology. It says, how significant do you expect your organization's investment in improving payments technology is going to be over the next 24 to 36 months? Only 9% said not significant area of investment, so a very small group. And then 48% significant area of investment. And then you had 42 saying somewhat significant area of investment. So you're having a large chunk of people. This is 90% of institutions that are saying that hey, over the next 24 to 36 months, they're going to be doing investments into improving their modernization of payment rails. So It's going to take some time, guys. Like I said, they're going over the next 24 to 36 months. This is not like over the next 3 months, right? So that's why I kind of say that November might come and go, but we are moving to a more technological age of payments here. How to improve? How important would the use of instant payments be to your organizations? 1% said not important at all. 11% said a little important. 38% said pretty important, and then very important is just almost 50% at 49% here. Use cases for instant payments to provide better customer experience, right? This is the highest rated because this is where they should be looking at, right? When customers do not get the experience that their friends are getting, or the cheaper payment rails that other banks are offering, they'll move their money. Like, customers want more choice. They want better options. They want lower rates. They want quicker payments. They want all of this. And so they want to be able to provide a better customer experience, because if they don't, that customer will leave. 58% if emergencies for urgent past due payments, and then 28% to make the payment cash flow easier or safer. There's just a lot of really good data that came out of this I wanted to share with you guys. Business challenges, modernization. If your organization wanted to make changes to methods or processes used in distributed payments, what is your biggest hurdle? 47% said operational processes change demands. IT resources is 41%. So maybe the company does not have their IT department built out for DLT, and they need to hire new people. So that's a concern. Understanding the payment options that are available, 40%. Resistance to change within the organization, costs, and customer pushback. Okay. And then how much of an obstacle is introducing new services or products in the following? Technical challenges is kind of the highest rated here. Competing priorities, cost of integration, and then budget for these institutions. So a lot of really good information here, guys. If you want to download this report, just go ahead and Google search this, and it'll come up, and you can go ahead and read that whole report yourself. BCZ regulations forcing them to update here. It's from Finastra again. Join our webinar where leading industry experts from regulatory bodies and infrastructure providers explore why more than 90% of European and American businesses are now strongly considering to adopt instant payments, right? This is November 2nd, 2023. I will bring you clips and updates in Sensei Chat about this. R3, a unified ledger. Let me go ahead and play this.
It was passing through my mind there, as you said, Richard. What did happen isn't what we expected to happen, and of course what happens isn't necessarily what ought to happen. Todd, you put it another way, really saying, the market kept giving me this message, and eventually I had to stop trying to tell them the answer. I don't know whether markets are like customers and the market is always right. I doubt it. And the reason I'm having these slightly dark thoughts is because it occurs to me that maybe the market or the institutions in the market don't actually want that single set of rules, that interoperability between different networks. Because if we look at what's happening in the token markets, we find individual banks are building individual tokenization engines in-house, hoping to keep their existing business. We see exchanges doing very similar things, building these competing token platforms, albeit without really any tokens being issued onto them, but certainly keeping themselves in that game. You've got all these tokenization projects which are taking place inside individual asset classes, in bonds, in private equity, in real estate, and so on, or in different financial functions, in payments, securities financing, stock loan, whatever it is. So it's a very fragmented marketplace when you look at the regulated capital markets. And so the point where R3 began as a collaborative venture has given way now to this dozens of competing subscale projects. And my dark thought is, is there a risk here that institutions are, again, inadvertently or overtly trying to build, like the internet pioneers did before them, like AOL did back in the 1990s, a set of walled gardens? So to put my question plainly, is that resistance to that single set of rules, that unified ledger, that single programmable platform, is it actually deliberate, or is it just a political fallout of the reality of these marketplaces, what was going to happen?
All right, let's keep it going here. This is a great clip from Ripple. Andrew Whitworth. That's with. Can't roll my tongue. We help to move, manage, and tokenize value in our core business in cross-border payments. The general public and media associate crypto just a Bitcoin. The people are listening who knows that there's more than just Bitcoin. There are consumer-facing crypto asset and crypto businesses, B2B. Let me play this for you. It's a great clip.
Thanks very much for having me, Ricardo, and the Payment Association. It's very good to be talking to you all. I mean, maybe it'd be helpful if I quickly say at the beginning, like, who Ripple is. So Ripple's a blockchain company. We help businesses move, manage, and tokenize value. And our core service helps businesses make cross-border payments cheaper, faster, and more transparently. So that's where we sit in this ecosystem. I mean, look, I think you're right. You know, crypto is here to stay. For me, the important thing is to understand what we mean by crypto. You know, a lot of people in the general public, media, public sector, some people are still used to think about crypto just in terms of the price of a retail token, you know, a Bitcoin. But it's much more than that. You know this, presumably the people listening to this know this, but the crypto ecosystem is diverse. There are a very wide range of actors with different business models, different use cases for the underlying technology, crypto asset technology. One key distinction, for example, is between consumer-facing tokens, so these retail ones, and crypto asset businesses that service other businesses, B2B, the sort of plumbing of the financial system. And every day we see more and more financial institutions and institutional investors joining this space. And that's because there's real utility, and the use cases that are being built in this space can actually help companies and people with what they want to do. So it's around this utility that we need to look. I mean, this is why it's here to stay, is because, you know, what can crypto asset technology do to improve the functioning of a given business or the financial system as a whole? It's staying because it solves real world problems in finance more widely. And I think the period we're in now is one where the noise and to some extent the heat has come out of the market. So businesses can actually take a look at the underlying benefit of crypto technologies and assess what the underlying utility is for them. And I think that's just one other point I'll maybe touch on here, which is an obvious one, but blockchain's a technology, right? It's not a product, it's not a service. And just like other sort of technological bases, like the internet or electricity, it's something that can be built upon for a wide range of purposes across the whole economy. The industry just happens, in one sense, just happens to have started with finance. You know, the steam engine started with cloth weaving, but it didn't end there. So I think we're at this very early stage of developing a quite broad-based technology that will have many use cases. So, you know, that's why it's here to stay. Now, there are ups and downs as people innovate. The important thing is having an environment that supports innovation while protecting customers. An important part of that is helping existing businesses adopt this new technology. You know, this is an evolutionary technology, not a revolutionary one. And one example of this, you know, Ripple's just celebrated its 10th anniversary. We're quite old for a crypto company. We've been through a lot of these market peaks and troughs already. I'm sure there'll be more in the future. But honestly, it looks like the crypto industry today is getting more solid and more useful. And that's, again, because of what it can do for others. And, you know, Ripple, we've been partnering with enterprises from the beginning. We started cross-border payments. We use XRP because it has a clear use case. So again, it goes back to this, I think, core answer to your question of why crypto is here to stay. Well, it's because.
All right, guys, and remember, like the XRP ledger, Ripple, they've only cleared what, $30 billion, something like that, low 30s and billions of dollars, maybe like 31, 32 by now, in payments, right? It's not a staggering number. It's not in the trillions, right? So we are still at the very kind of start of this. I know they've been in business for 10 years. It feels like we've gone a long way, but we're still very, very, very new here. Here you have Christina Georgieva. She's talking at the meeting that I shared earlier with, I guess, the president of the IMF. She's talking here about financial inclusion. I'm going to play a little bit of this, not the whole 6 minutes because she kind of goes on, but she does talk about financial inclusion. And how do you get to financial inclusion? Well, that's through DLT.
The topic we are going to discuss today, increasing financial inclusion. Just think, 1.4 billion adults outside of the formal financial system. It is in everybody's interest to tackle this issue. Why? Because financial inclusion unleashes entrepreneurship, consumer demand that otherwise would not be there, lifts up the functioning of the economy. bringing people into the financial system means more investments, higher productivity, particularly for women. Often they are the best entrepreneurs. I'll tell you in parentheses, here in Africa, it is proven women are better entrepreneurs than men. But they have 6 times less access to financing. Financial inclusion can bring more vital capital in their hands. We know that financial inclusion is a very, very diverse theme. It helps us accumulate savings, access.
All right, I'm not going to play any more of that because she doesn't really address crypto, but when you're talking about financial inclusion, you got to be thinking that she's maybe thinking in the back of her head about crypto. Scoop, Ripple ICO incoming. Shareholder communication, senior management. Looks like they're hiring this person, and people are speculating that Ripple is getting closer to an IPO. Obviously, I think Ripple is getting ready. Obviously, they don't think that the SEC is going to want to take this fight. Excuse me. And if the SEC doesn't want to take the fight, that means they have to settle, right? And if they do settle, Brad and Chris will probably pay a fine, move on, and then they will IPO. So we'll have to see how this works out. It is just speculation. Here is another clip. Ripple, Kurit Bhatia. Ripple is growing continuously. This year, we did 20 billion in revenue so far, right? So this year, Ripple's done 20 billion in revenue. We went live in 40 countries so far. Let me play this.
Around cost, transparency, speed.
Little low.
We've done that really, really well. And over the last few years have scaled across 40 countries, hundreds of customers across countries. And this year we'll process close to 20 billion in value, which is tremendous. We continue to do that, right? Our focus is to build solutions that solve problems, whether it's crypto liquidity, helping central banks launch CBDCs, tokenizing carbon credits so that market can operate efficiently, or indeed this year, focus on tokenizing other real-world financial assets and solve the frictions that exist in those industries around cost, transparency.
Yeah, I see what Nomad and Michael are talking about. Yeah, I mean, you have all these NDAs. We have no idea what's in the NDAs, but they are there, right? Because you saw in the court documentation where they kind of reference the NDAs. So we know that they are in fact there. We just don't know what is in the NDAs and who the NDAs are between. So Nomad coming in with the fire. Thank you, Nomad. Bitcoin briefly spiked 10% after a false report said that the SEC approved BlackRock's spot ETF. Cointelegraph has been dropping bombs lately, and this pumped up the market. We were talking, JP was talking about in the community that Cointelegraph is it Cointelegraph, I think, is they're gonna maybe lose market share from this, or I personally don't think so. How many false reports come out every day from these different crypto sources is just alarming. Now, if you had somebody on their team that was trading Bitcoin and that put the article out and made a bunch of money, that would be something. But just looks from what we've kind of seen that this was an article that was put out, pumped the market, immediately dumped the market after there was a false rumor, and a lot of people were like posting crazy things on Twitter. I saw it yesterday. It was kind of crazy. I went to look into it, and the first thing I saw was it was a false report. And so the price of Bitcoin briefly spiked as much as 10% on Monday after a false report that the Securities and Exchange Commission approved the first Bitcoin spot ETF. It is now deleted. Crypto-focused news outlet Cointelegraph had reported it on Twitter. Breaking: SEC approves iShare Bitcoin. So they jumped the gun, but it just goes to show you that I don't even want to call Cointelegraph an institution. One news service, quote unquote news service out here in the crypto space, put out something and it pumped the market really, really hard. You saw other tokens kind of gaining steam there too, because a lot of people feel like, the spot Bitcoin ETFs just won't affect Bitcoin. Obviously, people will be taking, the ETF is a way. If you don't understand what an ETF is, you're actually buying into an asset without actually owning the asset. So if you're buying it through like a company like BlackRock, BlackRock through their custody provider will buy the Bitcoin and hold on to it. It'll show you in the account that you own a Bitcoin, whatever. And if you go to sell it, BlackRock will just fund your account. I think BlackRock is going to buy as much Bitcoin as they want. They're going to hold on to it for the longer term. BlackRock doesn't think in bull markets. They think in decades. So I do think these institutions are going to be buying and holding these cryptos. It will kind of open the door for other ETFs. I mean, you're already seeing kind of Ethereum stuff come to fruition. You're going to see XRP. You're going to see XLM. You're going to see XDC ETFs in the future. When that will happen, I don't know. That's a great question. But Cointelegraph kind of letting the market down, kind of doing this whole back to front thing. DApp Radar is a great source. I wanted to comment that Rayon and I posted about 8 or 9 crypto tools in the Cryptonaires Discord. Rayon posted like 30 or something. So there's a good 40 or 45 crypto tools that are posted in the Research Tools channel in the Cryptonaires Discord. A lot of really great information here. DApp Radar is just one of them. They put this report out just on the 12th of October, so this is like last week. I just want to read you some key takeaways. I'm not going to get into this full report because I don't want to put you to sleep. It says blockchain gaming activity in quarter 3 2023 had an average of 786,000 daily unique active wallets, an increase of about 12% from the previous quarter. Alien World sustains its position as quarter 3's 2023 most played Web3 game in terms of wallets interacting with the blockchain, commanding over 60% of Wax's activity. Axie Infinity and Gods Unchained lead the pack in Web3 gaming transaction volume, having a volume of $90 million and $55 million respectively. Vital World DApps hit all-time trading volume record this quarter, totaling 13 million with 28,000 lands that have been sold. And in quarter 3 2023, saw Web3 gaming projects secure 600 million, publishing 2023 investments to 2.3 billion. So Web3 gaming is alive and well, guys. If you're making money out here in the gaming space, more power to you. All right, Crypto Eerie put this out the first time ever. Futureverse Fluff World Collective was bridged from Ethereum Layer 1 to the root network, paid for in XRP native asset XRPL, cross-chain gone wild. This is kind of cool.
Futureverse is a revolutionary platform that utilizes AI with metaverse technologies that enable open, scalable, and interoperable apps, games, and experiences.
All right, I don't want to play the whole ad for you because I don't know if she's getting paid to push this out, but I thought this was kind of cool. You know, anything that's EVM compatible, you can go ahead and move over. The root network is this right here. I should give them a follow. They only got about 5,618 followers. It's a public decentralized blockchain network optimized for metaverse apps, games, and experiences. So kind of cool. Cypress Demonicore actually posted this. I thought this was interesting. It says, I visited 3 different Wells Fargo ATMs and 4 different bank branches in my local area today, and all of them were out of cash. That is not ideal, and are not allowing customer withdrawals over $1,000. And he says, get your money out of the banks. You know, banks are going to have a liquidity problem. I talked about this in 2022. Some people thought I was crazy, but banks are having liquidity issues, right? When you're not creating new loans, you're not injecting new money out into the ecosystem in the world, right? And so lately, the federal government has been trying to claw money back, and you are seeing a kind of maybe not as much cash to go around as they say. So this is kind of worrisome. I don't think your bank is going to fail tomorrow, but just if you have your money in a small credit union or regional bank, you just want to look at your options. Maybe, I mean, this is a big bank, right? Wells Fargo is not a small bank, right? And if they're having maybe some issues, it could be just a temporary thing, or it could lead to a bigger problem. But something to keep an eye on, definitely. Corium, to celebrate Corium being the main sponsor of the largest blockchain event in Europe, we're giving away 2 tickets. So you want to go to Corium's official website if you want to go ahead and win tickets to this event.
If you're a blockchain enthusiast, then this is for you. We're giving away 2 tickets to Europe's most influential blockchain event, European Blockchain Convention. This year's event will take place in Barcelona, Spain, and will have over 5,000 attendees. To enter, all you have to do is follow us at Corium.
So they're giving away the tickets, but like, let's say you don't live in Europe. Are they going to fly to Europe? That was my question. But anyways, just thought that I would share that. Space Traveler, I just want to give you a shout out. This person's always sending me kind messages and sharing my information. I just really appreciate you, and I appreciate everyone else that watches my videos and shares and shows up to these chats. It really does help me grow, and I love you. Thank you. BB Bank, DeFi, neobanking super app, competitor to Crypto.com and Nexo, MasterCard Lighthouse partnership, debit cards launching soon, Freedom Finance, rebrand token. This is actually a $6.6 million market cap right now. Let me see if I can pull this up. B Bank. I don't know if, is it Block Bank? No, I don't know if that's it. I guess I should have pulled that up before. I do apologize. But just wanted to share that with you. If you want to do some due diligence on your own and take a look at that, please do. B Bank with the market cap of Crow would be $60. We'll have to see how this goes, but you're going to see a lot of these online banking platforms launch and meet Block Bank. Let's see if we can find it. Block Bank. This is Block Bank. Okay, so it's fallen since this person posted. I don't know. Is this is it? Trading sideways? Block Bank. I know there's a lot of scams. This is Block Bank. So maybe they're just starting to kind of fall in. I mean, you always see this with a crypto project. You always get this initial pump, right? And then you dump and you trade sideways forever. So I don't know what's going to happen. This is now trading at about $3.4 million market cap, but something to look into if this kind of is what you're after in the crypto space. All right, let's keep it going. MasterCard successfully wraps up CBDC pilot with Reserve Bank of Australia. Let me just kind of read down here. MasterCard has completed the central bank digital currency pilot with the Research Bank of Australia and Digital Finance Cooperative Research Center. The project tested how authorized parties who have gone through know your customer protocols could hold, use, and redeem CBDCs. Let me go ahead and scroll back in there. In addition, the project had tested how a holder could purchase an Ethereum-based NFT by locking the pilot CBDC and minting an equivalent amount of Ethereum-based wrap coins, according to MasterCard's statement. As the digital economy continues to mature, MasterCard has seen demand for consumers to participate in commerce across multiple blockchains, including public chains. MasterCard's Australia's division president Richard Worthmald said in a statement, this technology not only has the potential to drive more consumer choice, but it also unlocks new opportunities for collaboration between the public and private networks to drive genuine impact in the digital currency space. So I'd love to see that happening. Treasure, I guess, discovered the next gen of crypto securities with our latest innovations. Treasure Safe Family is designed to be future-proof for when crypto is commonplace and millions more have moved their crypto assets to self-custody. Our latest wallet, Treasure Safe 3, has been designed to make crypto custody safer and easier. Safeguard your digital assets with Treasure Keep Metal, the mistake-proof backup solution for your crypto. So Treasure out here trying to release a new wallet and be here in the next 10 years. Treasure, I think it has a little bit more benefits to it than some other ones. I still use a Ledger for some stuff. I know a lot of people don't like that. Ledger basically has a backdoor in it. Ledger is not open source. But hey, I thought this was interesting. Part 3 of the hacks. I don't know if you guys have been following this, talking about Alameda and FTX, the hack that happened like $400 and something million right before it kind of collapsed. Since the collapse of FTX, there's been no shortage of reporting about the publicity of risk management structures for both companies. Bankruptcy lawyer John Ray III famously described it as a complete failure of corporate controls. SBF believed that the single most important thing for a startup like Alameda and FTX was to be able to move very, very fast. And so much that he decided to ignore engineering and accounting practices that are considered standard as tech companies and financial services firms. This meant virtually no code testing and incomplete balance accounting. Safety checks for trading would also be added on as needed basis. Blockchain private keys and exchange APIs were stored in plain text in a file that several employees could access. This was probably an inside job, but who knows? The decisions allowed us to move at breathtaking speed, developer velocity that would make any Silicon Valley software engineer shed tears of joy. However, the flip side of the trade-off was that we'd have a major security incident once every few months. Incident 1, this is talking about Alameda trader got phished while trying to complete a DeFi transaction and accidentally clicked a fake link that had been prompted to the top of the Google search results. 100 million was lost there. They also had another issue, the yield farming on a new blockchain of questionable legitimacy. The creator ended up holding our funds hostage, and we had months of prolonged negotiations, 40 million there. Incident 3 is an old version of our plain text keys file was leaked, likely a former employee. The attacker transferred funds out in exchanges and some bad place orders, 50 million there. I mean, one thing after another, guys. FTX, and then you had the 400 million at the end there. So I hope these guys go to jail. I really hope Caroline Ellison gets some time too, because she was at the heart of all of this. September CPI inflation comes in at 3.7, above expectations at 3.6. Core inflation is 4.1%, in line with expectations of 4.1. We have PCE and PPI inflation rising, with CPI inflation above expectations. It says, how can the Fed cut interest rates anytime soon? Guys, they can't. The Fed came out and said that they think to get them to 2%, it is going to be up to 2026 to get them to a 2% range. That is a long way away. So I don't know if money printing is going to happen anytime soon, but we'll have to see how this plays out. Just in, credit card delinquency rates are on the rise sharply, now at 2020 March levels. So people don't have money to pay their credit cards. The delinquency rate on credit cards, those aged 18 to 29, is now at 9%. For those aged 30 to 39, delinquencies rates are about 75%. Delinquency rates have more than doubled from their lows, and the Fed starting raising their rates. So this is not good, right? As more people can't pay their bills, you know, that's going to affect them. S&P 493 is now just up 4% in 2023, while stocks continue to push higher. Meanwhile, the S&P 7, which is the remaining 7 largest tech stocks, S&P is up 57% in 2023. Combined, the S&P is up 14% year to date. Without tech stocks, and recent AI hype, markets would be significantly lower. So guys, understand that as the AI hype fades, you're going to see probably the stock market come down here. Rite Aid, I mean, this kind of hit me because as a kid, I went to Rite Aid, you know, prescriptions and things like that. Has officially filed for bankruptcy, 61st anniversary. As part of bankruptcy restructuring, Rite Aid has closed 2,100 stores. This is more people out of work, more people that can't pay their bills, right? The company has more than $2 billion in losses over the last 5 years, and 50% of their stores were closed from their peak. Their stock is down 80% this year, 99% all-time high. Rough. Ripple Swell Dubai agenda is now live. Circle USD will be speaking at the event. USDC and XRP coming soon. Who remembers when David Schwartz talked about the stablecoin potential coming to the XRP ledger? Yeah, you're going to definitely see Circle, Ripple working together. Circle is a very important key role in this whole thing. I don't know why people hold their stable coins in USDT when they can hold them in USDC. At least USDC Circle, they file the reports that they need to and are compliant. USDT does not. So good luck out here. This event hosted by Ripple was massive and got no mainstream attention. Look at the universities that are involved with Ripple. This is the Connect, Share, and Inspire. UBRI Connect brings scholars, researchers, and everyone together. And then here is the list of universities. There is a lot of them here. I'm not going to go ahead and list each and every one of them. If you want to go ahead and pause the stream or pause the video if you're watching it later and take a look at all of these, it was pretty massive. Peter Saint-Enoche, this guy is just so blunt. I like his bluntness. Bloomberg predicts recession. I mean, banks have changed, right? It used to be a soft landing. Now banks are saying we're probably going to be heading for a recession. Let me play this for you.
Recently, Bloomberg warned that, forget the soft landing consensus, a recession is, quote, likely and coming soon. To their credit, Bloomberg puts the blame where it belongs, on our crowded clown car of prestigious mainstream economists. I've mentioned in recent videos how mainstream media is finally admitting what we've been saying for months, that the soft landing was regime propaganda and that we are in for a big one. Bloomberg kicks off noting that the soft landing line has been trotted out before every single recession since 1969, when the phrase was popularized after the moon landing, if you believe in such things. In essence, the very phrase soft landing is a sure sign that a serious recession is coming. Sort of like the phrase, the banking system is fundamentally sound, precedes financial crashes, or don't throw the ball in the house, precedes broken lamps. If they're talking about it, you know it's bad. Now, Bloomberg suggests the surprise is because our ruling clique of mainstream economists have no idea what they're doing, writing, quote, "Why do economists find it so difficult to anticipate recessions? One reason is forecasters assume what happens next will be some kind of extension of what's already happened, a linear process. But recessions are nonlinear events. The human mind is not good at thinking about them." Well, mainstream economists are not good at thinking about them. We saw this failure in living color during the 2008 recession, when our billion-dollar armies of arrogant PhDs never saw it coming. Their response naturally was to demand more budget so they can think harder next time, which so far they have failed to do. I think the problem is actually much deeper beyond the linear thing, namely that modern mainstream economists learn almost no theory. They're essentially statisticians counting up things they don't understand and then correlating them. In fact, they're quite proud of it, the ideal being that the data speaks, like in physics. The problem is humans are not, in fact, rocks. You can't look at a person driving south on a highway and predict he'll keep going to Antarctica. You need to understand why he's driving. Is he going home? Is he stopping by Chipotle? Is there an ocean in the way? So the miles per hour due south, the data, it may well speak, but it doesn't actually say anything useful. So what should they be doing instead? We have centuries of economic theory and thousands of years of economic history that actually do identify patterns in real-world economies. The boom-bust cycle, the manipulated interest rates, the policy errors, the government spending that leaves stagflation in their wake. Austrian economists use these, I use them, but for mainstream the world is a dizzying array of blinking statistical associations, each liable to change at any time for any mysterious reason. And so, like medieval peasants who sacrifice a virgin instead of 3 goats, it didn't rain for a month, so that's worth a Nobel Prize. So what is next? Brought to you by Unchained. They won't improve their accuracy because the incentives are not there. Government economists are paid mouthpieces, intellectual bodyguards of the regime, as Rothbard put it, and it won't change so long as their paychecks clear. A fresh episode.
All right. It's pretty brutal out here. We got a little bit more to get to, guys, and then I'll get you out of here. It's crunch time for the SEC to decide on a spot Bitcoin
The
ETF.
SEC has deferred making decisions on a multitude of these filings recently, so we'll see. They're facing some deadlines coming up. I believe ARC's deadline is in January, and yet it does seem like the pressure may be building. Given this deadline they just faced in Grayscale that James was talking about, they decided not to appeal that ruling, which of course found that they were arbitrary and capricious in denying Grayscale's attempt to convert GBTC into an ETF. So it feels like it might be kind of crunch time, but of course we know that Gary Gensler and the SEC more broadly has raised a lot of concern about market manipulation and fraud in the crypto markets. That really has been their reasoning why they haven't approved spot Bitcoin products in the past. We'll see if it changes going forward in the future, and frankly, what it may make a material difference at all to this market, given we have seen some whipsaws in Bitcoin. We certainly saw it this morning off of this news, so clearly there is still some anticipation and excitement there, but also given what we've seen with Ether Future ETF, which really hasn't brought with it much flow or excitement, it remains to be seen what actually approval might mean for the crypto market.
No, man, the mic's low? Shouldn't be low. Hopefully not. I don't want to talk about that. Crypto's here to stay. Crypto kiosk giant expands its reach into New Zealand with cryptocurrency ATMs. Kiwis are embracing crypto with 1 in 10 holding digital assets. So big shout out to people in New Zealand as more crypto ATMs pop up near you. So if you're in New Zealand, let me know if you're seeing any of these ATMs around where you are. You need... Oh, it was a previous video. Gotcha. Hold on, let me just refresh some of this and we'll get through this and I'll get you guys out of here. This is just pointing out partnerships, Ripple, MasterCard, Fireblocks, IDMA. exploring Ripple's ecosystem. It's going to move on here. Technology is rapidly evolving. Embrace the wave, digital wave here. Immersing a human-centric digital transformation, strengthening policies for digital assets society. It's talking about digital divides, improving connectivity, technology governance, digital and green, the twins transitioning. I'm going to just let you pause this and read this if you want to go ahead and take a look at this. Crypto Moniker puts out a lot of great information. This is coming from the OECD. And the OECD is going digital. Project aims to help policymakers better understand the digital transformation that is underway to develop appropriate policies to help shape a positive digital future. Digital technologies and data are transformational. People, firms, and governments live, interact, produce, and work differently than in the past. These changes are accelerating rapidly. Here you go, Larry Fink on AI. This is part of a like 27-minute clip. I've watched the whole thing, but I wanted to take and just play this because this is his opinion on AI, and I think it's kind of valid to where we are right now.
Every company, every board we talk to is aggressively focusing on how can we navigate. If you overlay AI and robotics, this is what is going to transform societies very rapidly. And I think Europe, because of the demographics of Europe, we could use AI and robotics as a means to create much more productivity. I'm worried about, let me just say one thing I'm really worried about AI and robotics. Historically, over the last 30, 40 years, the countries that had great masses of people that were educated, that were aggressive, who are willing to work hard. The Chinese is a great example. They were able to build their economy. If AI and robotics changes how we work and how we build, the countries that have huge populations, growing populations, could be the most suffering nations because we are not going to have to build so many things offshore.
Interesting.
And the countries actually that have declining demographics and are worried about it, and the narrative, what does that mean for growth? It actually might be the true blessing. It may be those countries that will have less social pressure.
All right, I just thought that was a great clip. If you want to watch the whole video, just look up Larry Fink live interview. I think it was about 27 minutes long, and you can take a look. I just thought that was so funny. Brett Hill posted this. We glance in the image and the vision, the future of possibilities. XRP partners and then BTC partners. You gotta have a laugh sooner or later, right? I just thought that was funny. This is a great clip. Just talking about how much the developers are up 800% on XDC, guys. XDC is starting to really blossom here, and as it moves into phase 2 and phase 3, it's going to be a game changer. Check us out. This is on NASDAQ.
So right now we're resting at about 21,000 open source monthly active developers. And it's really important to know that this is an undercounting of the total number of developers in crypto. Open source means that Coinbase is not open source, game developers are not open source, a lot of applications and front ends are not open source, but it does give us a trend line and kind of starting point for understanding the level of development in the space. We're also, just this past month in August, across some of the top EVM, Ethereum virtual machine compatible layer 1s and 2s, we're seeing over 70,000 unique deployers of smart contracts on chain. So there's still a ton of activity. We also looked at, we pivoted the data to look at who's actually leaving. It turns out that the developers who are leaving are developers who have been in crypto for 12 months or less, and they contribute 20% of the code, meaning that developers who have been in crypto for more than 12 months, they contribute more than 80% of the code, and they're not going anywhere. They're staying and they're building. A lot of crypto curious developers poked their heads in, participated in hackathons, built side projects, and those developers have tended to leave. There are fewer new developers entering the space, but the developers who have been here, who are working on those meaty projects, who are contributing most of the code, they're as dedicated as ever. And they're
All All right, they're dedicated as ever. 80% of developers have been in the space longer than 12 months, are behind most of the code. That's pretty cool. This is more Swift November information. I mean, standards released 2023 will relax the requirement to have blockchain addresses or wallet account numbers to use digital tokens. The release will provide financial institutions with the ability to exchange ISO 20022 format messages, and it's talking about CBPR plus usage guidelines. It's going to be interesting to see what happens in November, guys. Just is there? Oh yeah, there's this clip down here. Let me play this. Let me just blow this up.
Coming from Swift indeed, and we'll be making the second presentation. And of course, Swift is quite a player, right, in the ISO messaging. So Sharifa.
Thank you, Anna. So first of all, I would like to thank you for the work that you've been doing. From a Swift perspective, this is extremely important to us to hear it from the industry. It's not really our purpose nor our role to dictate things. So very welcome this perspective. What I'd like to say is, and I'm turning to the audience right now, we do have a very large community at Swift, 11,000 players, 6,000 of them active in the security space. We'd like to hear from the rest of the world as well. So please get engaged. Please share your own perspective on this ISO 1502.2022 coexistence. The second point I wanted to mention, and it's linked to the question that was raised around digital assets, tokenized assets, and DLT. It's a bit like in the standards world, right? Traditional and digital ecosystems are going to coexist. And in order for us to achieve the goal that Andrea was mentioning in terms of achieving efficiency, making things work, and services adopted, we will go through a coexistence in the digital space as well. And what we've been doing as part of the standard maintenance releases, I believe we started somewhere in 2019, 2020, is to update the MT and the MX messages to carry digital information. So that is also extremely important until we find what is the future way of communicating in a digital asset space, be it APIs, as you said, Jean-Paul, trying to stick to the ISO 20022 data model or anything else.
It's nice to hear people from Swift talking about crypto and digital assets, as part of this ecosystem. I mean, it just really kind of, it does confirm this is where we're headed when you have people from Swift talking about it. Taiwan, crypto regulation by November of 2023. That is an interesting timeline. Taiwan to draft crypto law and address regulatory concerns. Taiwanese lawmakers plan to draft a special crypto law by November of 2023. Obviously, if they draft the crypto law, doesn't mean it gets passed, but drafting, at least they maybe can vote on it. The goal is to address growing concerns about offshore crypto exchanges and prevent the exploitation of regulatory loopholes in the crypto industry. On October 6th, Yang Xiang, a member, I think I nailed that one, a member of the legislative Yuan Taiwan's parliament, held a public hearing at the parliament to discuss a draft proposal with virtual asset service providers, legal experts, and academics. The proposal law would require all crypto platforms in Taiwan to apply for a permit, and those failing to do so would be asked to cease operations. While talking about the new law, Xiang explained in this case, under the authority of the special law, regulatory authorities can impose administrative penalties on operators who violate these self-regulation rules. Without such a special law, the regulators would lack the ability to impose penalties. So this is good, right? I mean, this will get rid of bad actors that are running some of these kind of exchanges that might not be up to snuff. There's a lot of really bad crypto exchanges out there that people deposit their money, maybe can't get their money out, and then they go kind of bust. Some of the biggest exchanges in the world, like FTX, Celsius, Nexo, these type of guys, gone, right? So you really need to get these laws put in globally to help keep the better players operational and kick out the bad players that do not have these licenses. So just something to take a look at. We did talk about that already. BRICS update. I mean, this is not anything to do with crypto. BRICS added 6 new countries: Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the UAE. BRICS is trying to, become more and more of a powerhouse. There's a lot of, what it is about BRICS countries, though. I don't see them working together too much outside of kind of, what we've heard already. Like I would like to see more things happening with the BRICS alliance, with crypto adoption, with crypto rules. Obviously, each country's kind of doing their own thing to kind of help their own country go into this new digital transformation and revolution. I would just like to see more out of the BRICS alliance with crypto adoption. You know, the only reason kind of Russia's moved to crypto is because there need ways around SWIFT. India, of course, has their CBDC, China CBDC. I think South Africa will be a big player, and hopefully some of these other countries will follow suit. SEPA payment instant credit transfers, a guide to implementation. Instant credit transfers among peers will take on new dimensions when financial institutions fully operationalize the SEPA instant credit mandate and migrate to the version 1.2 for the SEPA instant credit transfer SCT scheme rulebook when it comes into effect on the 19th. Remember, it all goes into effect on the 20th. I think November 19th is that Sunday. All right. Marcus Infanger, VP Ripple X Growth, highlights launching use cases beyond payments. I think this is good. You can't just be focused on one area. That's why Ripple's focused on so many. Let me play this.
The financial use cases today, I mean, can you give some examples of those? And also, what regions are those being implemented in?
Yeah, so with Ripple and RippleNet, I would definitely highlight payments first and foremost. And if you look at payments and all the financial use cases individually, they're all like trillions of dollars in total addressable market. And so if you look at, hey, what has a payment transaction underneath, there's actually a lot more than you would intuitively think. And hence why Ripple honed in on payments first and foremost, found product market fit there, and basically has been scaling that business up until now. As we look further, we certainly see other areas where blockchain technology and core financial use cases can make a big difference. Things like aggregating liquidity, obviously the action of exchanging, from one form of value into another. The storage of value, as well as things like lending in the future potentially as well, where this technology can bring a lot of efficiency into the game.
Do you think AI will play a role at all in terms of DeFi for institutions?
Yeah, I mean, this is a topic, I think it's been gathering so much attention, even beyond just blockchain technology. I truly think the possibilities will be, unimaginable almost. Key here is that we can trust AI, right, as humans, and I think that goes again beyond just blockchain or finance. And so it's interesting. Blockchain technology inherently is built for trust, and so I do believe there. As AI takes its own share in terms of, technological revolution, that blockchain technology will play an important role to weave that trust into the interaction with AI. And there's some crazy stuff happening in the crypto world already today with, tinkering with zero-knowledge proof and using that as an elegant cryptographic solution to make AI trustless, so we can able to trust it, and then you can see things like self-innovating blockchains being suddenly on the menu, which is very interesting, given that the decentralized network may not be the most efficient one by design, as opposed to when you have a centralized network, somebody can call the shots and make decisions more quickly.
Right, self-innovating blockchains. That's interesting.
Self-innovating blockchains. That sounds pretty cool. Let's keep it going here. The SEC has added crypto to its list of 2024 exam priorities. Note that most crypto companies are not registered with the SEC, thus do not pay registration fees. Does this indicate that Gary Gensler is using agency resources and funds paid by registered companies to make a priority of cracking down on crypto? And it says an industry he is not authorized to regulate yet? Or does the SEC expect that more crypto companies will register in 2024? So interesting way to look at it. I'm not going to read all of this because I don't want to put you to sleep, but let's keep it going. Roblox adds XRP as a new payment option. I thought this was cool. There's a lot of people, right? Roblox online gaming platform boasting over 200 million active users can now use XRP as a payment method. Right on. Tether freezes 32 addresses linked to terrorism and warfare in Israel and Ukraine. More stuff happening with that. Ferrari to accept crypto as a payment in cars in the U.S. In the next bull market, I do see people showing up to the Ferrari dealership saying, hey, I got my XRP or I got my Stellar or whatever it is. Take my money. I want a car. You know, people love to spend money on things like cars. EU formally agrees on new crypto tax data sharing rules. Tax data is kind of boring, but the new European Union rules that let tax authorities share data on individuals' crypto holdings were formally adopted by the bloc's finance ministers today. The document will now be published in the EU's official journal and entered into force in 20 days later. The rules were proposed last year in a bid to block assets from being stashed overseas using crypto and had unanimous support for EU member states despite discussions mostly taking place largely behind closed doors. In May, a copy of the draft bill obtained by CoinDesk under Freedom of Information laws showed that the rules extend as an existing law to cover a wide range of digital assets, it says confirmed on Tuesday, to include stablecoin, non-fungible tokens, decentralized finance tokens, as well as proceeds from crypto staking. The law, known as the Eighth Directive and Administrative Cooperation, DAC 8, forces crypto companies to report information on customers' holdings that will automatically be shared between tax authorities. The European Commission, responsible for proposing the EU legislation, said on Tuesday that the DAC 8's crypto provisions complement the recently finalized landmark markets crypto assets regulation, which goes into effect at the end of 2024, and anti-money laundering rules under the Transfer of Funds Regulation, TFR. So the directive will improve member states' ability to detect and combat tax fraud. I know there's a lot of people that don't pay their crypto taxes. Guys, they are going to find a way to find you. Just be very careful what you're doing out here. If you have a unanimous wallet, and you send money to a crypto exchange that you are KYC'd on, they are going to connect one with the other, okay? I know a lot of us think we're really slick out here and we're skating around and sticking our finger up at the man, but don't be that naive, okay? Just understand they're going to figure out a way to tax you. And that's it. That's the chat. Thank you so much for being here. Let me go ahead and spend a little bit of time in the chat answering any questions that you guys may have. We've been going an hour and 43 minutes. We went through, I don't know, 70 or 80 pieces of crypto news over the past hour and 40 minutes. I hope this saved you some time updating you from around the crypto space. I wanted to thank Kathleen, who's been in the chat the whole time. Zelf, I wanted to thank you too. Other Nomad, I wanted to thank you as well. Crypto Lax, great to see you. Mulciber, always a pleasure. Everybody from the Cryptoneers community, always an honor to be here with you and to share the news with these projects that are launching and new crypto news from around the space. Is there any questions from anybody that I can answer before I go ahead and get some lunch for the day and let Luna out from this room that she's been very quietly and patiently sitting down here sleeping and hasn't really caused me any trouble over the past couple hours. Kathleen, AMMs may be implemented soon, depending on validator votes. It's looking more positive now. Kathleen, do you where are you looking for AMM's information? XRPL AMM vote. Let me see if I can pull it up. That is not where I want it to go. Known amendments. Let's see. Here we go. AMMs. Doesn't give me the vote total though. Open for voting. Let's see if we can pull this up. How do you even find the data on that? I have to look for it. Anyone have a link for the data that I can just take a look at? Pull it up. I'm ready to sleep like a sloth, and I wish it was that time. I usually, my favorite part of the day, just to kind of share some personal stuff with you, is usually like 6 to 9:30 p.m. Like if I don't fall asleep by like 9:15 or 9:30, I'm awake all night. Like I have a really weird thing. So like I love just being able to unwind at the end of the day after working on my computer for 12 hours, watch some good shows on, you know, your Netflix and your Paramounts and stuff like that, and just do nothing and rest my brain, because going through all this information sometimes can just wear on you pretty hard, especially, you know, 6 to 7 days a week. Kathleen, do you have the exact total and how far we are away? I would love to be able to take a look at that information. You would think it's kind of amendments dashboard. Let's see. Threshold 28 of 35 votes. Consensus. I got it. Not yet enabled. So it does look like they need 7 more votes to get this over the hump. So here's the validators that have said no, and here are the yays. A lot of actually said no. I'm kind of surprised here. You would think they would want more functionality coming to the XRP ledger. Spectre said no. Bitso said no. Nays. Wait, hold on. Why would some of these, like, it's kind of strange to see some of these guys say no. Huh. House of Usher was pretty fun on Netflix. Okay, Sharon, I'm watching that right now, and sometimes the volume goes up really loud on my sound system, and I get scared, and I jump, and I scare the shit out of my dog. I fully scare Luna really bad. Arlington Capital. It's interesting to see all of these people say no. BitTrue. BitThumb. Wow. Not kind of how I thought some of these guys would vote, but hey, everyone's up to whatever they want to do, I guess. I wonder if maybe this impacts them in some way. I just don't. I'd love to get like why Spectre voted no, XRP Scan voted no. It's just interesting. Arlington Capital. Just need some more vote. Is that it? Yeah, I mean, it's open. It's the only one that's open. It's got to be that. It's an issue for the exchanges. Yeah, I'm sure it is, right? I'm sure it is. Anyways, all right, guys. Well, hey, I will end it there. Just want to thank you all for being here. Thank you for spending the time with me. It's always an honor to learn and grow out here with you every single day. If I can answer any questions or if I can be ever of service to you, please let me know. If you're ever wanting to join a great crypto community, there's always Cryptonaires. We provide a lot of great information right at your fingertips to save you time. Please take a look at us at cryptonaires.com. Aloha, everyone. Thank you so much for being here with me. Thank you.